The moving average exponential 20 is one of the indicators that can help you to escape price manipulation in terms of your entry. Here is a typical illustration. As you can see, this is a double top, and when you see this double top, there is a liquidity that is sitting up here. You can see, although the original intention of this price is to sell, which means that if you were trading a double top pattern, this is the double top, you should have sold here, and eventually you have your stop loss here. So what happened next is that this point that pushed to the upside would have eventually taken you out. So by using the moving average, EMA 20 will be one of your escape route from price manipulation. In this video, I'll be showing you exactly how you can use the EMA 20 in order for you to escape price manipulation in the market. It is important to know that in as much as we use other price confirmations such as break of structure chart pattern to make our entry, one of the easiest way to escape price manipulation is the use of moving average for our entry, and I will show you why. If you look at this carefully, most of these manipulations that happens, like what happens here, happens before the moving average cross. You can see that manipulation there. Now, but look at what happened afterwards. After price closes below this moving average, if you should have made your entry this place, if your entry could have been here, this candle that closed below the moving average, you realize that you have automatically escaped this manipulation, and then you see how price keep playing out afterward, and then your stop loss would have been here. Of course, that is where your stop loss would have been, and you should have escaped manipulation. Let's go a bit back to see what again has happened in time past and see how this also can be a source of escape from price manipulation. If you look at these two as well, you realize that a lot happens. If you were to make your entry after this, you should have been in this move. So this is our number one escape route from what? From price manipulation. Having said that, we don't trade moving average in isolation. We trade moving average in confirmation with other valid method of trading. For instance, if we must trade this, we'll come to our 4-hour time frame, and of course this is a typical downtrend because this is a lower high, this is a lower low, another lower high, and obviously another lower low, and then price came here to give us a lower high. So what are we expecting? We are expecting that price mitigate this. So here we have a typical order block. So here is our order block, and you can see how price pull back into this order block. So what do? You now move to your 15-minute time frame. So you'll be using your 15-minute time frame for this confirmation. So I'll come to my 15-minute time frame. So you can see now, first I want you to note all this. This is a double top, and this is always a liquidity sitting at every double top. So in this M pattern, that is the liquidity. If you look at our indicator window, you realize that this is a typical divergence. So we are having a divergence. But however, even in your divergence, remember, the fact that you have a divergence doesn't mean that price will play out immediately. So you need to be patient for your divergence to be confirmed. And afterward, look at what follow. If you were to have made this entry here earlier, based on the double top candle formation or this candlestick pattern, this liquidity push up would have taken you out of the market. So automatically you would have been taken out. But the person waiting to price, but if you are patient enough, always wait for price to close below this exponential moving average 20. Immediately that happens, your stop loss is here, and then you will see the outcome. At the end of the day, you can see how the price is still playing out. So if your entry is still here and your stop loss is here, you have still make almost 1:2. This is 1:2 profit, and this could have been your second entry. This bearish flag pattern would have been your second entry as far as this price movement is concerned. So this is exactly how you can take advantage of this. It is very much simple. Remember, it was not taken in isolation. Okay, you will need a price action to validate this. Number one, look at our entry confirmation. We have this bearish rejection candle. You can see this is a bearish pin bar. That candle you are seeing there. So you need a bearish pin bar candlestick confirmation. And if you look at this, you can treat here as a lower low. You can treat here as a lower high. Sorry, higher low, higher high, higher low, higher high. So you can see that price break through this point, right? And if price already break through that point, let me show you something deeper. Price already break through here, which is more like a break of structure. Okay, and what happened? You realize that price went back again and then continue to the downside. So price closes below this moving average. So this is your entry. Your stop loss is here. So you see now you use candlestick to make your entry. So that is exactly what you can do as far as this trading pattern is concerned, as far as this entry confirmation is concerned. But however, if you were to make this entry on a 1 hour time frame, this is where your entry would have been. This is a divergence. Do you see that? This is a divergence on a 1 hour time frame. You don't need to wait for your moving average to close. You don't use your moving average to make the entry on a 1 hour time frame. This moving average is applicable on a 15-minute time frame. Take note. So on a 1 hour time frame, this is your entry. This is a bearish pin bar. That is your entry. Your stop loss is above the order block where you mark as your point of interest. That is where your stop loss will be. So you could have sold here. Immediately after the close of that candle, you sell, and you would have been in this movement all the way to this point. So this is very much simple, and it is a straightforward method of trading. If you have any question, go ahead to ask in the comment section. This helps you to escape price manipulation at all time. Okay, again, your entry is here, your stop loss is here. This is your stop loss, always above. And even on this, why you make this entry here, it is this bullish candle that end the manipulation. Let me show you. This is the double top you are seeing there. 1, 2. So you see now those weak were the double top. So look at it. So this pin bar already has taken away this liquidity. So you see that. So that is why if you use this candlestick pattern for your sell entry here, you wouldn't have anything to be afraid of, because that liquidity was already taken. Your stop loss is above the order block, and then you would have been in this trade all the way to this point. But on a lower time frame, you will need price, because if you look at the 15-minute time frame, you can see that on a 15-minute time frame. But if you know what you are doing on a 15-minute time frame, immediately you have this liquidity sweep. if you know what you are doing and you know that this have swept away this liquidity and it closed as a bearish candle, you can as well make your entry. Otherwise, stick to the close of this moving average and you will be glad you did. So let me run you through the settings of the indicator. This is the indicator. Period 20, shift is 0, method is exponential. You apply to close, and here is our relative strength index. The period is 9. These are the levels. Here you change this color to that of your background. If your background is black, change it to black. We don't want that to appear on what we are doing. Then here we have our commodity channel index. Period is 14. Thank you so much for watching this video to this time, and if you are yet to subscribe to this channel, what are you waiting for? Go ahead to smash the subscription button, turn on your notification bell so you'll be the first to get notified when we upload our next video. Please like, share, and we hope to see you again as you return to watch more ideas in the coming video. Please do not forget, you must always determine the trend of the market. You mark your point of interest, you wait for price to return to that zone, and then you wait for your entry trigger. Thank you and see you in the subsequent video.